There's
So,
Paul. There's Jason.
what's up?
Hey, what's up, guys? How you doing?
Good.
Hello.
Got a little bit of a low turnout this morning.
Hey, only the good ones ride, though, so we're good.
That's right.
Very good.
It only takes one to party.
There you go. Well, so how's y'all's week go?
Well, Scott
Or
and
has it?
Scott and David are still in the live chat.
Are they? Yeah. I'll post this. Hopefully I got the right one. Did you guys get the link off the Discord or off the email?
I got a Discord.
Okay. All right. Oh, we got a couple of people starting to show up. Okay. Cool. So what'd you get? Did you guys, I know you got I think Paul and Jason, you all were on the Bitcoin. No, you weren't. Okay.
Yeah, I
I
was.
know. Yeah. What'd you take away from it and what could we add to it in the future?
Man, I thought it was
People are,
great. My excuse me. My mom sat in it with me too because she's like, "What the hell's crypto?" And
Oh,
like,
really?
as she walked away, she's like, "Okay, so are we buying some tomorrow?" So, I mean,
Wow.
nice.
she was like, "Wow, that's probably some of the best explanation I've heard." She said, "I just couldn't wrap my head around it until that meeting." So I think it was great. I mean, we went and bought crypto the next morning.
Wow.
Awesome. Okay.
Um,
Good.
yeah, that's good. I mean, I wish someone would have done that to me, but I got mine through just watching Michael Saylor mostly and becoming a disciple of his. And I
Yeah,
put
I've
some
turned
more.
on the.
I put some more videos on the Platinum Crypto of Michael Saylor and some others, and um, yeah. And
Can I?
the reason that we bring it up is, you know, it's a big asset class now, and I don't want us to miss it. If that's fits within somebody's portfolio, that they understand it and have the ability to pick some up if they want, you know.
Yeah, yeah. Can I ask a quick question?
Yeah.
Yeah.
It's about crypto, not swing trading.
No, that's fine.
um, I think this is a scam that this person is trying to pull on me, but they're saying that there's a crypto.com that uses an open source AI to help assist because it decentralizes your trades, and they're like pushing me to get on this site, and I'm like really leery about it.
I've never
That
heard
just
of it.
sounds weird.
That's
Yeah.
what I said. I'm like, what the hell? What? They're like, oh, it decentralizes everything, so you can go in and out of it, and blah blah blah. I'm like, well, so I mean, he's trading on Thinkorswim. You can go in and out of trades. I mean, granted, it's crypto, but I don't know. I've never heard of the site, and they're just and the way they're so persistent about it. I'm like, okay, this is all a scam.
Probably if you think it is, it probably is.
Yeah, yeah.
Block
it. Yeah, yes, I plan on it.
Yeah. And there's that with every new thing, they're going to have that. You know, you have it with stocks. I mean, even on these channels, I think people try to impersonate Trent and Kerry all the time,
Yeah.
you know, and contact people.
I don't think they
I'm
know
friends
who
with
they're
at least 5
impersonating.
Trents.
Yeah, no one wants to impersonate me. I'm not exciting enough.
That's
So,
hilarious.
right.
All right. You want to get going?
Yeah, we'll get going.
Right.
See who shows up. We could send a reminder over to David and Scott. They get talking and
Yeah, I just posted something else.
okay.
Yeah.
Because I know they get rolling, and David showed me yesterday. He's working on his swing trading system, and he's, you know, moving it in with some fundamentals, and you know, he's just defining how he wants to trade, you know, and that's, I told him that's exactly the purpose of this channel from my point of view, is to not trade for you and to not tell you how to trade, but to give you the foundation, just like in Bitcoin. the foundation so you can go off and make it your own. And David's done that. Paul's done that for sure. And trade within the way they want to trade and what they're comfortable with. And that's the whole idea. As long as you're making money, I don't care how you're doing it, as long as it fits your risk tolerance, which is different than mine, and your trading horizon, how much money you want to trade. So, and on the other side, we have the investment side with Kerry, on the gold side, and a little more in-depth fundamental depth, deep dives into stocks. And I think between the two, we're seeing even our swing traders here utilize both to help them get better trades. So I'm happy with that. That's what it's all about. Well, there he is. There's Scott. I didn't think you're going to make it off the live channel, Scott.
I had to go fetch him.
Good. Okay. All right. Well, I'm going to get going since Scott's here. Now I can officially start. I don't want to start without him. My Oklahoma friend. So I want to talk a little bit. I'm going to start out with something that's seasonal in December, and it could be affecting some of the market momentum in certain stocks, and that's the Santa Claus rally, and then window dressing that happens in December. I don't spend too much time, but it is a factor that messes with the markets a little bit. So the seasonal trend that we have in the stock market called the Santa Claus rally, I'm sure you heard it. It's kind of an informal term for a period of positive stock market performance. That's why it's the Santa Claus rally. And it occurs during normally the last 5 days of the year and the first 2 trading days of the new year. So the exact reasons behind this phenomenon are debated among different people, and I don't know it, but there are several factors that contribute to its occurrence, okay? Number one is year-end optimism, and we have a ton of year-end optimism this time with the new election and new expectations out of the new administration. And as the year draws to close, investors feel more optimistic, about the future, and that leads to increased buying activity. It's the holiday season; people are happier for the most part, hopefully. So that's one reason. Another reason is tax loss selling. So traders may sell underperforming stocks in December to realize capital losses and offset capital gains, reducing their tax burden. And this can create buying opportunities for other investors as they sell off. And then portfolio rebalancing. So when we talked about that before, institutional investors may rebalance their portfolios at the end of the year to align with their investment objectives. And this can involve buying or selling stocks to achieve the desired asset allocation. And that's really called window dressing, okay? And that's a strategy that these fund managers use to kind of pull the sheep over their investors' eyes and it improves not their performance per se of the portfolio, but the appearance of what's in their portfolios at the end of the year. So you might have had a whole, your portfolio, you did 8% this year, and you're talking to your guy next to you at work, and he made, he was in the S&P 500 and he made 25% this year, and you're like, well, what the heck? Or he was in, the Mag 7, and made 28%. And so you go and look at your portfolio after you get it, and talk to this guy, and you look in there and you got the Mag 7 in there. Well, that could be window dressing. And if you look at the charts of December on the Mag 7, you can see a little bit of that. The funds are, adding to what was good this year, and they do this. I've seen it happen. So they'll sell their underperforming stocks. They'll buy these better ones like the Mag 7, and it looks like a really cool portfolio on paper, and it leaves you scratching your head saying, well, wow, I'm in it. Why didn't I get it? So this can temporarily inflate the prices of certain stocks, particularly in December. And I think we're seeing some of that, especially in the Mag 7 area. So the impact of both this, Santa Claus rally and window dressing can amplify, window dressing can amplify the effects of the Santa Claus rally. As fund managers buy stocks to improve their portfolios, it can increase demand and drive up prices. However, it's important to note that window dressing is a short-term strategy, and its impact on the market is temporary. So that's why you see, kind of that little bump, and then it can be a whole new ball game at the beginning of the year. So while the Santa Claus rally and window dressing can influence the stock market behavior in December, it's essential to approach these trends with a critical eye. This phenomenon are not guaranteed to occur every year, and market conditions can vary. So when you hear that, that's kind of my 30,000 foot spew on what window dressing and the Santa Claus rally is. And I do think we're seeing some of that. And the closer we get to the year end, you're going to see even more of it, especially in tax loss harvesting. Has anyone seen that before? Trent, you've seen it because you were an
Yeah.
RIA, so you've seen it, know about it. So
Yeah, it's mutual fund managers do it. They harvest their tax losses. I would used to get notices from mutual fund reps saying, "Hey, they're going to unload all their dead stuff on this date. If you
yeah,
don't want to, or take profits, if you don't want to get a big capital gains or K1 or whatever they send out, make sure you're not in it." And it was like, okay, you know.
yeah,
But yeah, and they passed that stuff through, so it was one of those things that, yeah, it happens. It's a
yeah.
game. It's how
And
they do it.
it's just it can manipulate the market a bit. So it's if you have a trading or investment system, just be aware of it. It can affect swing trading a little because if you find on some of those stocks, you can swing them up, but be known that once it's over, it's over. And utilize your stops. And if you're in an investment strategy uh, and you believe in the stocks you're in, just hold tight and don't let it sway you, basically. So I want to talk a
Yeah.
little bit about this market and the end of the year and the enthusiasm that we're seeing in this market, and just put a little spin on it. So retail customers have never been so bullish on stocks, okay? And with record divergence relative to their income expectations, and this is according to Deutsche Bank research, investor optimism towards US stocks has eclipsed the 2000.com bubble. Okay. Ordinary investors are sending an extremely bullish signal in stocks, creating the risk of a negative surprise should speculative behavior lead to a sudden bursting of potential stock market bubble in 2025. That's according to Deutsche Bank research. U.S. consumers have never felt so optimistic about gains in the stock market over the next 12 months, eclipsing anything we saw around 2000, Jim Reed, global head of macro and thematic research at Deutsche Bank, said in a note emailed Tuesday. Retail investors are often seen arriving late and en masse to speculative market moves, he said, adding that it's possible this could be such a period. The NASDAQ Composite Index hit 20,000 for the first time on Wednesday, putting an exclamation point on the year, in which the excitement over artificial intelligence and expectations of falling interest rates fueled a searing rally in technology stocks. While the rally has rewarded investors who went big on growth in tech, it has also stirred unease over rising valuations and the dominance of mega cap stocks, which now have an increasingly heavily weighting in the index. This is clearly an aspect of the chaos of the chase into the year end, where the winners keep winning, said Cameron Dawson, Chief Investment Officer at New Edge Wealth. The question is if this momentum can persist into 2025, where stretched valuations, positioning, sentiment, and growth expectations could all present high bars to jump over to keep above average returns going. So just know, I think, out of that you're seeing high valuations, especially in the stocks that are moving the market. And the stocks that are moving the market right now are the mega caps. The Mag 7s are moving the stock market. And you can find other areas where stocks are going up, but they don't have the same basis and importance within indexes that these 7 stocks do. They control over 30% of the weight of those indexes when you have 7 stocks. So we'll look at those charts a little later, but you'll be able to see that in those charts. So if something happens to those, it's going to bring the indexes down. So just be aware. If you believe that in the enthusiasm and that they're going to go on forever, just that'd be fine too. I'm not here to tell you what to do. I'm just here to kind of give you some thoughts on what I've seen over the years and what I'm seeing now. So economic news came out this week, and we had a CPI and the PPI, and the CPI in the U.S. increased 0.3 month over month in November. That's the most since April. slightly above October's 0.2% in line with market expectations. The index for shelter rose 0.3 versus 0.4 in October, accounting for nearly 40% of the monthly all items increase. Food prices went up 0.4, energy went up 0.2, led by gasoline and natural gas. Other increases were seen in used cars and trucks, household furnishings and operations, medical care, new vehicles, and recreation. The index for communication, on the other hand, was down 1%. So really one category went down a little bit. But again, we're seeing CPI increase month over month. The rate of inflation is not going down. It's not hitting the 2% target. So, the focus is always on the core, which excludes things we don't need like food and energy. And that rose by 0.3% from the previous month of November, the same pace as in October and in line with expectations. Core inflation was consistent for commodities less food and energy commodities and shelter, while costs stalled for transportation services. The increase compares to a 0.3% rise in the headline figure. In turn, annual core inflation was at 3.3% as expected. So the annual core, 3.3%. We're going the wrong direction from the 2%. But after that came out, the markets went up on Wednesday. So the annual core consumer price inflation rate in the United States, which excludes items such as food and energy, stood at a 3-month high of 3.3%, unchanged from October and September. So the market took that as that's good news somehow, and the market went up. And the insinuation is that that's not enough. We're going to have another interest rate cut, and we're going to eventually get back to zero on our interest rates. And so Thursday came around, and the PPI came out, and that's the producer price index, and that's what manufacturers see in their inflation, which eventually is the lead into consumers, what consumers have, because if I make something, it costs me more to make it. I either have to lower the price, take less margin, or raise the price on you, the consumer who buys it, which causes the CPI to go up. So the PPI surged 0.4 month over month, and that was the biggest month over month jump since June, which lifted the year over year rise in PPI to over 3%, far above expectations, and the highest since February of 2023. Headline PPI's big jump was driven by food costs rising at their fastest since November 2022. Headline PPI's big jump in food costs was really one of the big things that caused it was eggs. And so I asked Jan about eggs. She's like, oh, yeah, it's like $5 or $6 a carton now. I'm like, wow. Okay. So anyway, when you hear that, food's coming down and everyone's crazy out there, that, inflation's good and everything, you might want to think about that. When you look at core PPI, that's ex food and energy, that rose 0.2 month over month as expected, but the year over year core PPI jumped to 3.4% year over year, and that's the hottest since February 2023. So again, there's one leg of the stagnation stool. You got increasing inflation. So we're lowering interest rates. We've been lowering interest rates, the Fed has, and we're seeing increased inflation coming back. We've seen this party before in the 70s and 80s where they started lowering too fast. And the reason they started lowering was because of the employment index. And we saw that, the employment rate went up, to 4.2% from 4.1. You saw the labor participation rate come down. And then we had U.S. jobs claims this week. And U.S. initial jobless claims rose by 17,000 from the previous week, well above market expectations that they would fall, okay, to mark the sharpest count of new claims since October. In turn, outstanding claims rose by 15,000 from the previous week to 1.886 million, relatively close to a 3-year high of 1.9 million from earlier November. So again, we got inflation going up and we got jobless claims going up. If we looked at the job report from last time, we're seeing it's mostly all part-time jobs. We're seeing people getting out of the labor force. So are they going to, continue to lower rates? Because it's not seeming to do anything on their two mandates. Their mandates are inflation, controlling it, and jobs, okay? And it appears they're both going in the wrong direction. When the PPI came out Thursday, we saw the market took a different look at it and went down. Okay, short term, you see what happens. It goes up Wednesday, goes down Thursday, went up today, now it's back down. Other things that, even though we have all this enthusiasm, is the U.S. budget deficit came out, and the U.S. government posted $367 billion budget deficit for November. That's up 17% from a year earlier, as calendar adjustments for benefit payments boosted outlays by some 80 billion compared to the same month in 2023. You're seeing the current administration push as much money out the door to foreign aid, to different departments before the new administration comes in. Janet Yellen apologized this week for not keeping it under control, and I don't know why. She's been doing it for 4 years. But we're seeing more and more money being printed, more and more money being spent, which feeds into the inflation. So anyway, I'm not seeing anything good out of spending cuts yet. Even the Fed, everyone's pretty high on cuts that they're going to cut. The Cleveland Fed President Beth Hammack stated last Friday, that the U.S. Central Bank is at or near the point where it should moderate the pace of interest rate cuts, pointing to a robust economy and a still elevated inflation. Fed Governor Michelle Bowman said, "I would prefer that we proceed cautiously and gradually in lowering the policy rate as inflation remains elevated." And I guess when I look at it, they lowered the rates 50 basis points, 25 basis points, and the 10-year yield went up. So they don't have any effect on that, and that causes mortgages to go up. We're starting to see mortgages come down just a little bit. The average interest rate for a 30-year fixed mortgage last week fell to 6.67%. Okay, that was the lowest in 7 weeks, but it's still way higher than it was. It was compared to 6.69% in the previous period. So we're starting to see that come down. I'm also seeing, if you guys do Treasury bills, we used to get 5.5%, and it went to 5, went to 4.7. I think it's at 4.29 for a 30-day bill right now. So we're seeing that come down, where it's making actually some of the CDs that are offered by banks more attractive on a short term than actually the Treasury bill. When it comes to consumer credit, a new study of American credit card debt finds the average household credit card balance as of the third quarter of 2024 was around $10,700 after adjusting for inflation. That's according to the personal finance website Wallet Hub, which Friday released its new credit card debt study, which found that consumers added $21 billion in debt during the third quarter of 2024. 68% of the Wallet Hub respondents said Christmas will be less generous this year because of inflation, and about a third said they'll spend less on holiday shopping this year compared with 2023. And I even saw news where people are still, I forget what the percent was, they still have debt on their credit cards from last Christmas they're paying off, and then they're topping it off with this. So credit remains high, as far as on your balances in the US. And we're also seeing delinquencies high. We're seeing, again, repos of cars high. So again, when we have all this enthusiasm, even with enthusiasm and new administration, it's going to take a while to get, in my opinion, this economy back on the tracks. Okay, there's a lot to fix here. Let's go to company news or market news. Something that's interesting that's coming up. Cantor Fitzgerald's Tracker Quants laid out its forecasted changes for the upcoming index review. The NASDAQ will implement its annual rebalance for its 100 index today. Okay, I think it's at 7 o'clock Central Time tonight. They're going to announce it. Cantor tells investors in a research note, the firm sees Palantir, MicroStrategy, and Axon being added to the NASDAQ 100, with Supermicro, Moderna, and Illumina being removed. Okay, so the NASDAQ 100 is one of the most replicated indexes by mutual funds and various exchange-traded funds. Between the two forms of index investing, there are hundreds of funds tracking the performance of the NASDAQ 100. This is one of the reasons that it's very beneficial for a company to be included in the NASDAQ 100 index. And some of the benefits are index fund buying pressure. The NASDAQ 100 is tracked by numerous index funds and ETFs, like the Invesco QQQ. When a stock is added, these funds must buy the stock to replicate the index, creating a significant demand, pushing the price higher of these stocks that are added. Increased visibility and credibility. Inclusion in the NASDAQ 100 signals that the company is among the largest and most influential in the NASDAQ exchange. This increases investors' confidence and attracts more attention from retail and institutional investors, and improved liquidity. Stocks and major indices tend to see higher trading volumes. This improved liquidity makes the stock more attractive to large institutional investors, which can also drive the price higher. And then there's the momentum effect. Stocks that join a major index often benefit from a positive momentum effect. Investors may perceive the inclusion as a signal of a strong fundamentals or future growth potential. So again, the NASDAQ is due to announce any changes to the index as a part of its annual reconstitution at 8 p.m. tonight, Eastern time. So some of the candidates to be added: Palantir, EQIX, MicroStrategy, Axon, DraftKings, ALNY, United Airlines, TSCO, which is Tractor Supply, eBay, and MPWR. So, you can go look at those stocks today. A lot of investors try to front run this, or traders, and get in hopes that, they pick the right one. And next week when they get on and they have to rebalance, you write it up. Doesn't happen all the time, but that is a strategy. So the ones that are going to be dropped, the top 5 are Moderna, and these are all estimates. SMCI, MDB, ILMN, Illumina, and CDW are the top 5 on the list that analysts have said. Now, whether those are the right ones or not, I don't know. But just be aware that these indexes do change. You saw what happened in September when Palantir got listed in the S&P. I think during that time, Palantir went up 25%. Not a guarantee, but it happens. Okay, and then Palantir since then has gone up, and now it looks like it may be listed in the NASDAQ 100. So just be aware that's going to happen next week. We're going to get the list tonight, though. Okay. In the too unbelievable to believe, Senator Elizabeth Warren from Massachusetts is going to introduce a bill in Congress aimed at shifting corporations away from maximizing shareholder value and towards giving more support to workers and other stakeholders. The Accountable Capitalism Act proposes a series of reforms to increase corporate responsibility, strengthen the voices of workers and others in corporate decisions, and shift companies away from their focus on shareholders. I, for one, am opposed to that. If I own shares in a company, I want to be the one who benefits from that. It's up to the company to treat their workers right and keep them happy so that the company grows. If your workers aren't happy, your company's not going to grow and your company's going to sink. We have unions that help with labor. You can see the strength of the unions this year. I just don't believe that government has any role in telling corporations what they should do when it comes to who gets the maximized shareholder value, who doesn't. So that's my opinion. Anyone have an opinion on that besides me?
Less government.
This is an equal opportunity session, so if you disagree, that's fine too.
I think less government.
Yes.
I see Bob's here. I'm sure that Bob, since Bob owns a private company, he's the shareholder. I'm sure he'd be happy to endorse this bill from Elizabeth Warren.
The government does such a great job running the government and spending money they have. It's just weird to me anyway. Not trying to be political, but it's out there. Okay, big deal this week. A federal judge in Oregon blocked Kroger's proposed $25 billion tie-up with Albertsons, ruling that the largest merger in U.S. supermarket history would limit competition and harm consumers. Supermarkets have been losing ground in recent decades to competition, and Kroger and Albertsons want to merge to better fight off Walmart and Amazon. And when I heard about this, the judge who overruled it or blocked this said that they weren't competing against Amazon or Walmart or Target. That they had other business and they weren't competing in grocery wise with these two companies. And knowing that I've read enough Walmart press releases that their biggest part of their
profit is groceries. So to say that to me is off base. I don't know where he's getting his information, this judge, but anyway, Albertsons now on Wednesday formally terminated his proposed $25 billion merger with Kroger and filed a lawsuit against Kroger, saying it violated its contracts and didn't follow through on commitments to get to help get the deal approved. So they're going to be in a little fight now, Kroger and Albertsons. Pfizer confirmed on Thursday that it recently reduced its employee headcount, although it provided fewer details. Wolf Research analyst estimated Wednesday in the note declines the company laid off between 1,000 and 1,500 employees, or between 2.4 and 3.7% of the workforce. Robinhood, financial services firm Robinhood announced its November 2024 operating data. It says total assets under custody more than doubled to 195 billion in November compared to the same period a year ago, while net deposits stood at 5.6 billion. Does anyone use Robinhood? I don't hear anything. I guess Robinhood. What's that?
I said I have an account, but I've used it like once or twice and haven't used it in years.
I know it's popular among younger people, and they trade a lot of different stuff on there. Besides, I think equities, their crypto is really big. They say it witnessed a significant jump in trading volumes, with the total equity trading volumes up tripling to 147.1 billion, and options contract trading rising 63% to 155.5 million. However, the highlight was a surge in crypto trading, with trading volumes jumping 780% in crypto to 35.2 billion in November. So you're seeing the effect of crypto on Robinhood. Okay. Meta. Wall Street Journal reports that Meta, the parent company of Facebook and Instagram, donated $1 million to President-elect Donald Trump's inaugural fund, something neither Meta nor Meta CEO Mark Zuckerberg did for Trump's inaugural fund in 2017 or President Biden's in 2021. The $1 million donation comes 2 weeks after Zuckerberg dined with Trump at his Mar-a-Lago club in South Florida, bringing the Facebook founder and former president closer in what was once a fraught relationship. Getting some feedback there. Do you know where that's coming from, Trent?
Hold on, let me mute myself.
Trent, you got the radio on?
Yeah, it sounds like it. The $1 million donation comes 2 weeks after Zuckerberg dined with Trump at his Mar-a-Lago club in South Florida, bringing the Facebook founder and the former president closer in what was once a fraught relationship. One person familiar with the donation said Zuckerberg's team spoke with the inaugural fund before the Mar-a-Lago club dinner, adding that the social media billionaire has told business leaders he's optimistic about a Trump presidency. At last month's dinner, Stephen Miller, appointed deputy chief of staff for Trump's second term, told News that Zuckerberg had made clear that he wants to support the national renewal of America under Trump's leadership. Mark Zuckerberg, in other news this week, also sold approximately $88 million worth of company stock over the past week, according to a regulatory filing on Wednesday. The sale occurred in 2 tranches, with Zuckerberg divesting 43.8 million in shares last week, followed by an additional 44.2 million this week. The transactions were executed at prices ranging from $607 to $621. The insider selling activity at Meta has been notable, with company insiders selling 59.63 thousand shares worth 90.71 million over the past 30 days, while no insider purchases were reported during the same period. So here we again have an insider selling, and we've seen that a lot in a lot of these Mag 7 positions, especially NVIDIA. You've seen a lot from their CEO and their executive team, while not buying, selling. So remember that when you continue to buy these stocks, that they're not selling at all, but you're seeing some of the leaders sell, and you got to wonder why in some cases. Now, not to be outdone, Amazon is set to donate $1 million to President-elect Donald Trump's inauguration fund, the company spokesman said late on Thursday. So it's different this time in President Trump 2.0, it seems to me, where he was at battle, it seemed, with the Mag 7s, especially the communication side of them, to where now it looks like these companies are reaching out uh, uh, with a white flag, maybe not a white flag, but trying to be more proactive with the relationship with him and his administration, which is, for me, a reason for optimism for myself. So, anyone else have comment on any of that? It just seems different this time on this one.
Yeah, I think it really does. And I think it's, how Trump has put himself out there in the last basically a couple of years up into this election. He seems more friendlier, I guess, and less aggressive. And I think after 4 years of the existing administration, a lot of these companies are like, it was actually better the other way. Um, and they're making that move back towards Trump, I think, in a sense. So we'll see. So time will tell. But I think a lot of corporations are starting to look at the last 4 years and go regulation and restrictions and
Taxes.
suppression of freedom of speech and all this junk. And I think they're looking at it going, okay, this is not what we thought it would be. So maybe that's why they're getting friendly with him. So
Yeah,
I don't know.
and it seems like a lot of countries are spending time with him, and different leaders of different industries are spending a lot of time even before he's become the actual president. So we'll see what happens. I mean, I think he even
Yeah.
sat next to Joe Biden when he went to Notre Dame or whatever, and and they had a conversation. So maybe the world's friendlying up a little bit. That'd be good.
Yeah. Yeah.
I'm going to talk a little bit about Bitcoin. I know we did a big thing on Tuesday, but a lot of information has come up, and again, I believe this asset class has the ability to help uh, people in the platinum channel become a little bit more wealthier, with a small amount of risk. Not that you go all in, but there's people out there now who are now jumping on in the Bitcoin boat that weren't big people, and one of them was Ray Dalio. Okay, Ray Dalio expressed concerns about the potential pending debt money problem in global finance and urged the shift towards hard assets like Bitcoin and gold. This is the first time I've heard him say anything about Bitcoin. Dalio is the founder of one of the world's largest hedge funds, Bridgewater Associates, said he would invest in hard money like gold and Bitcoin while avoiding debt assets, the South China Morning Post reported on December 10th. The veteran investor referred to unprecedented levels of indebtedness seen in all major countries, including the United States and China, stressing that current levels will not be sustainable. It is impossible for these countries to be able to not have a debt crisis in the years ahead that will lead to a great decline in money value, Dalio said in a speech at a financial conference in Abu Dhabi. And we've been talking about for a year on this channel that the value of your dollar is being debased. With every dollar that they print in treasuries, along with consumer inflation, and when they're printing money, that's monetary inflation. And we talked about it in the Bitcoin seminar about you have to make about 13.3% a year just to keep up with both those inflation numbers. Dalio previously believed cryptocurrencies like Bitcoin would not succeed in the way people hoped they would, but he has emerged as a major Bitcoin supporter in recent years. And interesting, I think the only one left is Warren Buffett and a few others, maybe the board of Microsoft. Thomas Petterfy, he's a billionaire founder of Interactive Brokers Group, recommended that investors have 2 to 3% of net assets in Bitcoin. He said his firm only allowed its clientele to put up to 10% of their total assets in crypto. Petterfy believes that everyone without Bitcoin should find ways of owning some, but not too much due to an associated risk of price fluctuations. Well, you've got that in stocks too, price fluctuations. He was, however, concerned that cryptocurrencies were just as worthy as paper currencies since they carried no intrinsic value. Having grown up in a socialist society, Petterfy was convinced that a free market economy was the only way to run the society efficiently. Petterfy, the chair of the retail brokerage firm Interactive Brokers, said investing a small portion of Bitcoin was advisable. He, however, cautioned against having too much exposure to cryptocurrencies in general because it was dangerous. Petterfy, who was initially critical of Bitcoin, argued that Bitcoin should be separated from the real economy as the CME prepared to launch Bitcoin futures. So 2 to 3%, you think about that, if every firm who is an advisory firm opened up and put in 2 to 3% of a percentage in all of their clients' portfolio, that would be a huge amount of Bitcoin and a huge amount of ETFs they would be buying for those firms. Michael Saylor just had an interview with Galaxy this week and said, 2 to 3% is good. He says, but it's more of an insurance policy, just in case you miss out. So anyway, we're starting to see more and more companies talk about it and talk about percentages. I think BlackRock even came out and they are advising some of their clients to actually go up to 10% in Bitcoin now.
Yeah, but you can't make any money on Bitcoin unless you put 10% in. You're not really making money. 1%, 2%, 3%. They're not making any money. It's an insurance policy.
I agree with that. I think that dollar cost averaging over time. I think that if you had 1/10 of a Bitcoin over time, when I started talking about it on this channel at $65,000, you would have had $6,500 invested, and today you'd have $10,000. 4 months later, 5 months later. So that's making money off a 10th. But I'm with you though, Bob. I think 2% is an insurance policy to a degree.
I agree.
Yeah. Yep. Tom Lee. A lot of people follow Tom Lee. This week he doubled down on his $250,000 price target for Bitcoin in 2025 on Wednesday, thanks to a friendlier White House. Lee is the managing partner and head of research at Fundstrat. Global Advisors stated in a CNBC interview that the leading cryptocurrency faces numerous regulatory pressures in the last few years, with the new White House is embracing digital assets. A new SEC chair, a new FTC chair, a new Commerce secretary. I think these are being viewed as pro-business, reviving animal spirits, but I think it's a good proxy. I think a good proxy is watching Bitcoin, Lee said. When asked about Bitcoin's price target in 2025, the analyst replied that it would be following the halving cycle, implying a level somewhere around 250,000. On top of that, we have a Trump put because Bitcoin is potentially a strategic reserve for the U.S., Lee said. He also accurately called Bitcoin's breach above $100,000 last week. So interesting, if you follow Tom Lee. Other things that's happened in the Bitcoin world since Tuesday, since we talked about it. And I'm only saying this because there's so much momentum behind this, and I don't see too many roadblocks. I don't see hardly any roadblocks since the election of where this could go. Russian state-owned domestic news agency RIA Novosti reported that State Duma Deputy Anton Chekhov proposed creating a strategic Bitcoin reserve for Russia, claiming they have obtained a copy of the document. The document explains that creating a strategic Bitcoin reserve could enhance Russia's financial stability, noting that traditional currency reserves such as the dollar, euro, and yuan are all subject to inflation and sanctions, and that is a new alternate independent of any individual country independent of any individual country is needed. This development continues the trend of countries looking to build a strategic Bitcoin reserve, including the United States, El Salvador, Brazil, Poland, and others. An initiative led by in the United States by President-elect Donald Trump. The U.S. is looking to build a strategic Bitcoin reserve of over 1 million Bitcoin, which appears to have caught the attention of certain Russian officials. Just 5 days ago, Russian President Vladimir Putin publicly stated that no one can ban or prohibit the use of Bitcoin, and it will continue to develop. So it's interesting that Russia is looking at it. I know that China owns Bitcoin also. Texas. Legislation was introduced in the Texas House of Representatives on Thursday to establish a strategic Bitcoin reserve, which could serve as a proving ground for the U.S. Treasury. The proposed bill would enable the state to start building a strategic Bitcoin reserve by accepting taxes, fees, and donations in Bitcoin that would be held for a minimum of 5 years. So Texas is one of the largest economies in the United States, and even in probably the top 10 in the world. So that would be a big thing too. Pennsylvania's already looked at it, along with 6 other states and a lot of municipalities. So again, the momentum of acceptance of Bitcoin seems to be building and continuing to roll. Again, MicroStrategy, we talked a little bit about this. Bernstein analysts have spotlighted MicroStrategy's potential inclusion in the NASDAQ 100, a move that can significantly boost companies' visibility and attract fresh inflows from major ETFs like QQQ. Bloomberg Intelligence reported suggests that NASDAQ 100 inclusion could bring substantial one-time and ongoing inflows to MicroStrategy, estimated at $2.1 billion initially. Microsoft shareholders voted against the Bitcoin buying proposal. Microsoft board asked shareholders to vote against the proposed Bitcoin treasury strategy on Tuesday, and they followed suit. Amazon stock rose nearly 1% in morning trading last Monday to hit a fresh all-time high of 230 after a coalition of shareholders petitioned the e-commerce giant to allocate a portion of its assets to Bitcoin. The group, led by National Center for Public Policy Research, is urging Amazon to take a page from MicroStrategy's playbook and do its fiduciary duty by allocating at least 5% of its $88 billion in cash reserves to Bitcoin as a hedge against inflation. Shareholders argue that Bitcoin has significantly outperformed traditional investments like corporate bonds, citing a 131% rise over the past year, they claim. They claim diversifying into Bitcoin could protect Amazon's cash reserves from inflation, erosion, and enhance shareholder value. So again, here's another huge company, Mag 7, looking into it. We'll see what happens. Riot Platforms unveiled a plan to raise $500 million through private offering, convertible senior notes aimed at qualified institutional buyers. Proceeds from the offering will be used to purchase Bitcoin and fund general corporate purposes, further solidifying Riot's position in the Bitcoin mining sector. As of Q3 2024, Riot held 10,400 Bitcoin, having mined 1,100 Bitcoin during the quarter, an increase from the 844 mined in Q2. So I guess to put a cork in the Bitcoin bottle here, it continues to draw in more interest and draw in more acceptance. And the reason I think that we see that, let me show something here. I can share my screen here. It's something we looked at Tuesday.
I just wanted to say, Mark, in reference to Bitcoin, there's an interview on with Dave Portnoy interviewing Michael Saylor.
Yeah,
You guys can look it up.
I put it on the Platinum Crypto Discord channel.
Oh, you saw it.
Yep. Anyway, go ahead. Go ahead.
I was just going to say,
what,
I thought it was a great interview, and there was some good information in there on, you know, one thing that I'm learning is options, and, you know, owning his stock and then selling it out 200 days, you know, the calls, you know, there's a huge upswing there that you can make some great money
I agree.
at buying it when it's down. Like right now, his stock, in my opinion, is too high. It's got to pull back.
It'll be interesting if he gets included in the NASDAQ 100. I think it'll probably maybe go up 445, 455.
I agree with that if that does happen.
Yeah.
But right now, I think it's like his stock is at the price where he starts selling it to buy more Bitcoin. That's what scares me.
I don't think he has to that much though with these convertible debt that he's doing.
He's been doing it.
I know he's done
I
it.
got caught up. I actually got caught up in it once, and I was not happy about it.
Okay, I understand that. Yep. I own it, and I've been a long-term owner, so I'm in at a pretty good cost basis. And I do dollar cost average in when I see an opportunity. You know, it's a long term for me, and part of the reason for that is this chart we're seeing right here, and this is from Michael Saylor. We looked at it when you talk about monetary inflation and consumer inflation, and that the cost of capital and the cost of our purchasing power, you have to make at least 13.3%, which is basically the S&P and U.S. growth or the NASDAQ 100. Well, who are those guys? Those guys are the Mag 7, really. That
Exactly.
are making these, yeah. And you really do. And the reason that Michael Saylor says he likes Bitcoin over the 4 years he's been analyzing it, it's returned 60% a year over those 4 years. And
I
so,
would say he's controlling the market too.
Yep. And so again, annualized asset performance chart over 4 years, you can see Magnificent 7, 29%, Bitcoin 60, S&P 15, so it's barely over the monetary inflation. Real estate, gold, and bonds are actually losing you money, according to his strategy. So anyway, that's how I wanted to start out and show what we're up against as investors. And let me get back to another chart here. Oh, please, a little slow. Okay. Okay, so anyone else have anything on Bitcoin or anything that you want to talk about? Because I'm going to move on a little bit here. Nothing? Okay. So Paul had asked that we talked about a few things, and one of the things, how much money or retailer institutions or others are being used to drive the markets. And so I went and I looked at this last week, U.S. investors snapped up equity funds for a 6th consecutive week through December 11th, spurred by the potential for a Federal Reserve interest rate cut at the upcoming meeting amid signs of a moderating labor market and cooling inflation. They acquired a net of 6.36 billion worth of U.S. equity funds during the week, after a net of 8.82 billion worth of additions the previous week. Okay, so that's equity funds. U.S. large cap and small cap equity funds experienced strong demand, attracting inflows of 2.33 billion and 2.12 billion respectively. Meanwhile, multi-cap funds garnered 958 million in net purchases, while mid-cap funds saw outflows of 144 million. In parallel, investors divested 1.22 billion from sectorial funds in the most significant weekly outflow since September 25th, with healthcare, consumer discretionary, and financial services experiencing liquidations of 898 million, 584 million, and 299 million respectively. U.S. bond funds saw a net 4.15 billion worth of purchases during the week, extending a buying trend into the 28th consecutive week. U.S. short to intermediate investment grade funds garnered 2.9 billion, the largest inflow in 3 weeks. Additionally, general domestic taxable fixed income and loan participation funds drew substantial inflows of 1.96 billion and 1.06 billion. Money market funds saw a marginal 2.67 billion worth of net outflows, following a sharp 121.3 billion worth of purchases in the previous week. So we saw a lot of, again, we're talking about the end of the year. We saw a lot of flows. Let me share this one. So here's his equity funds flows for the last 4 weeks, and money markets you can see in the purple. And this was 12.4. This week you saw bonds. Here's your equity and money market. Okay, and mixed assets hardly any. So and when we look at equity sectors, okay, communication services down, or consumer communication services was up, consumer discretionary is down, staples up, a little bit in energy up as far as flows, financials down, gold and precious metals down, healthcare down, industrials up a little. This is again money flow in, information tech down, materials up, real estate down, and utilities down for this last week. And this is money markets, bond equity. Let's see if I got that right. Yep. Well, here's bond funds. So again, bond funds, you can see the flow is a lot of money flowing into bond funds. It looks like municipal debt and inflation protected funds were the two that had money actually flowing out of them at this time. When I go look at some charts. Let me come up here. We had a couple, when you look at this last week of money flow just in the charts performance. You saw XLC had a nice run along the 9. Okay, this is the communications service sector. Well, why is that doing well? Well, because it includes Meta, includes Google, includes Netflix. Okay, Warner Brothers had a deal that they're going to sell WBD. You can see what happened to Warner Brothers. Again, this isn't a very high part of the fund, but if you look at Meta, you can see Meta has been up, hit the green line of death, and now it's bouncing right off the 9 today. Again, this is a daily chart, but this uprise affects the XLC, and that's why you see the XLC up. Google, of course, they came out with a new chip announcement, but again, you see that a couple days ago, hit the green line of death. Of course, it was outside the Bollinger, which only happens 5% of the time, and it came back within the Bollinger today, but we still have some resistance above it. And then Netflix, these are all heavy into this index, and that's what's causing the XLC to rise. Again, Netflix came up, hit resistance on 3 days and 3 days out, and again now it's underneath the 9, and we're seeing some drops in the oscillators and all these too. So this could be flattening out, and we could be seeing towards the end of the year these flatten out, consolidate, and potentially go down. The other one that's up is the XLY. These are the only two looking good this week as far as the 11 sectors.
Did you sell your Netflix, Bob? Not there.
Yeah.
Not there.
So XLY, you can see has come up. There is no calculated green line of death at this point. You can see where the sell orders are, but I would imagine we're going to see one come in right here. But again, a nice run up. Why is the XLY up? This is consumer discretionary. XLY is Amazon. Okay. There's Amazon. Green line of death, 3 days in a row. Well, 4. Heading sideways. Starting to see the Bollingers roll in a little bit. Starting to see a little roll on the MACD. Still having trouble getting past resistance. What else do we got in Amazon? We got Tesla in this ETF. Oops. Same thing, 3 days. Finding some resistance here. Got some sell orders just above it. Tesla's helping with this XLY. Another stock in here is O'Reilly Automotive. That had a nice run up this week, helping the XLY again. 1, 2, 3, 4 days at resistance. Usually takes something significant to push this over and beyond the sells. Sometimes you'll see them go up, run the sells for a while, and then come back down. So always be cautious on that. But those are the only 2 sectors really out of the 11 this week that have done anything significant. Of course, you can look at Palantir. Okay, Palantir has been running along its green line of death, the resistance level, and plus a sell level right above it. We'll see what happens to Palantir if it gets included into the NASDAQ, and you can see where is.
Did you mention something like that at one point this week?
Mm-hmm.
That
here's September, and this is where Palantir went into, I believe, the S&P. So you got a boost up in there, and then another boost up again. So we'll see what happens to Palantir. And then, of course, another big stock that moved is Broadcom, and that's quite a gap in Broadcom. So it was running up anyway. That was a nice move.
Dave,
Uh,
you're in that, right, Dave? Take a break from your writing a letter.
Is he here?
Congratulations. Yeah, he's smiling because he was in it. He played.
Yeah,
Oh.
I
Yeah.
gave Mark a big lesson yesterday about 3:30 on stock charts and forecasts and everything, and told him to get into Broadcom, and he said, "No, that's not the way I trade." So,
Well,
I
you showed me your system, and you use fundamentals, and you said it was long term, and I said, well, I do swing trading, and I follow my guidelines, which say get out at earnings. Okay, which I did.
There is some big investors that sold Nvidia and bought this stock.
Yeah,
You
we
guys
went over
remember
that
that
last.
news?
We
Yeah.
went over that last week. Yeah, a lot of them
Mhm.
did.
They knew something, huh?
Probably. Do you think?
Mm,
Yeah.
Yep.
What was the other one that went down this week?
Oracle
Yeah.
and Adobe.
Yeah, Adobe. See, these don't work all the time. So if I'm swing trading, this is what I try to avoid. And then you're right, Paul, Adobe. Yeah, again, swing trading wise, I'd get out. Investment wise, that's when you got to kind of do what David's been doing. David goes and he looks at the things that Kerry talks about. You know, the revenues and the growth in revenues and all that, and you make your decision. But if you're long term, you know, you might like the company, but he actually tries to back it up with his plan. David does by looking at some of the fundamentals. Now in Adobe, this one just keeps sinking down and it's not looking good. I'm glad that swing traders that would have followed my guidelines would have gotten out before that on a swing trade for sure. What else you got, Paul? Anything interesting that I missed?
I just bought a small position in Reddit. I had it for a long time and then I sold out and then I'm back in.
This one I don't like because of that green line of death, but Paul is fearless when it comes to the green line of death. So, but this one had a nice run. I mean, if you could have gotten, I mean, here's one where earnings popped it. Okay. And for me, swing trading, I would have waited until it got back inside, you know, basically you can see it went sideways, got back inside the Bollinger Band. And that would have been a nice run up, get out, you know, and again, back in. And what a nice run that would be. My guidelines, my personal one, get me out at the screen line. Other people have different ways of doing it, but seems to me when it hits this, it goes sideways and consolidates. It's something, some unknown market condition or something, some news has to really push to get it past that line. And that's what I'm seeing. You know, I put it in the charts of interest this morning. I mean, that's what I'm seeing in SPY. Okay. QQQ. See, again, we're hitting it. We'll see what happens. DIA, Dow has come up, played its game on the green line. Now it's under the 9, and we're seeing we're seeing what's happening to the Dow, you know. And then the small caps, IWM, same thing. Looks like the Dow. Oscillators are bad. Hit the green line. I mean, hit here, couldn't get past. A little bit. Just above. That's above. So yeah. One thing I've been looking at, and I put it in the charts of interest, is Bitcoin. And when you trade crypto, and I don't trade crypto, okay, I accumulate Bitcoin. I don't trade it. You know, we saw a pennant here and said, well, if it gets past that, it's going to go about that far up, and it did, came up. And now we're in this ascending or this symmetrical triangle. You can see what's happened. Hits the top, comes down, hits the bottom, came up, got across it, came back down, reconfirmed on top of that line. And today it's going up and it'll probably touch the Bollinger Band again. So this is looking like a breakout. I'm still waiting for a MACD to break, but you're looking at a stochastic. And like Bob says, you know, we're coming up on the weekend and funny things happen in Bitcoin on the weekend, right, Bob? Bob still there?
Bob's gone. Bob's gone.
I'm not gone. I'm here.
There he is.
I'm in a
So-
meeting and I'm listening.
So we'll see what happens with Bitcoin. I mean, you go to MSTR, MicroStrategy, kind of looking at the same kind of pattern here, kind of breaking, we'll see. Bob was talking about call options. And I showed you guys this one, which is Misty, MSTY, pays out monthly. Has a nice oscillator as far as the stochastic. We're seeing a little bit of a crossover. Again, same pattern. This one's come out, but now it's having a little trouble on the resistance level. Let's see if it can break past that. Then you have some cells up here. I like the fact that I'm seeing a little bit of a curve on the Bollinger, not much, but and the stochastic and this potential crossover on Misty. This one paid out $4.20, I think, a share. Again, before you invest in anything like this, make sure you know the risk of these things because they're riskier than most equities you'll get into because it's an option income strategy ETF by YieldMax. So make sure you look into that. The other one out there that people are familiar with is Bitcoin's or BlackRock's IBIT. And you can see the exact thing happened to IBIT. It's trading out. It's now above its resistance a little bit. We're seeing the Bollingers moving up and to the right. We've got some sell orders here. We'll see what happens. You know, the stochastic crossed. We got an RSI and positive momentum. We still haven't crossed on the MACD, which is important to me. But, you know, we're starting to see patterns that are looking positive, at least for Bitcoin related stocks.
I'm sorry, Mark,
Okay.
can you tell me what is that green dark line?
Oh, that is that's the intermediate resistance level. Here, hold on, let me put it back up.
Thank you.
And so this comes with the program. You can just click on it and you can modify it. And you can say, I have mine on a, and it'll tell you where support and resistance are. Support's at 36. Resistance is at 57 on an intermediate scale. Support's down here. You can move it if you want long term. It doesn't really move a lot on some of these. Like that one moved the short term down or the support level down. And then when you see it, it'll go back up a little bit here. But to get into that, you just go up here to technical analysis and you hit this support and resistance line and it'll come on.
Okay.
And then the next one is stops. That tells you where people have placed stop orders. You can click that one on too. And that's this purple line here. If you click on that, it'll tell you where the stops are. I always go above and tight when I'm looking at something going up. And so there's calculated stops at about $59, we'll say. That's where you'll see stops, people putting orders in. And you can see that lines up right here with the Bollinger Band. So that doesn't surprise me.
Has anybody invested in the Tom Lee Bitcoin ETF?
What's the number? What's the
Ticker.
symbol? You know the symbol, Bob?
I don't. Give me a minute.
Okay. Can someone look that up? It's Tom Lee though, FunStat.
Yes.
What do you bet we see the same pattern?
Is it the Wang and Lee group or Lee Enterprises?
Should be FunStat.
FunStat?
Yeah. That's his company. What is the Lee Enterprise symbol? That Lee Enterprise isn't a Bitcoin though, by ETF.
It starts with a G. I think it's GNY or something like that. The symbol. I'm sorry.
It's Granny,
clear.
Granny, I think.
Yeah, I think that would be correct.
GRNY.
Calls everything granny.
Granny
Yeah.
Shots, US large cap. That's a US large cap. GRNY is.
No.
Anyway, are you in that one? Is there something special about that one you like, Bob?
I did buy into it. I don't think it did do a pop, but it's, I don't know, I don't see enough performance with it yet, but it just came out.
What's the volume on it? You know?
I don't. I
Okay.
don't.
Yeah, if someone finds a ticker, let me know. We'll put it up. Um,
Unfortunately, I'm in my warehouse right now, and I'm not in a good spot to give you that information.
Okay. Hey, while we
I
got you,
think I
Bob,
just found it. I think it's GRNY.
There you go.
I thought I just had that up. That's Shots US Large Cap ETF.
No,
Oh,
that's not it.
oh, okay, sorry.
Let's try GBNY just for kicks and grins. Nope. Generations Bank Corp.
Uh,
Okay. So Bob, while we have you, how are things in manufacturing going? Anything different?
Believe it or not, I would say that optimism, and we have seen a pickup after the election in sales. However, not to where we want it to be. But I would say that we're seeing a better scenario. We see more optimism.
I saw the Small Business Optimism Index came out this week, and it was the highest ever for the last 4 years.
I don't
So-
know if I would believe that it's that great. But I would say it's definitely better.
I think it's just running on, the new administration optimism. And optimism can be squelched pretty quickly, with some bad news. So,
Yeah, it doesn't take much to kill it.
right.
But overall, I would say to you, and none of that, the ISM is coming up too.
Right.
It's been, it's been below 50. It's not above 50, but it's, it is starting to return towards the 50 line. So that's a plus too. I mean, I'm getting optimistic now. I just bought a whole bunch of manufacturing equipment.
Wow.
So I am making some investments. Because I think that the next year is going to be a good year, and I'm planning for that.
Good.
Hey, that
Good.
Granny is GRNY and it is Tom Lee's. Is there something wrong with what you had up there? It's GRNY.
It's supposed to be Bitcoin.
Oh, Bitcoin. Okay,
Yeah,
sorry.
it's GRNY is a Front Strat Granny Shots US Large Cap ETF. Yeah.
No,
Okay.
that's not it.
Right. That's not Bitcoin, what I got
No.
here.
Nope.
Sorry, Charlie.
Give me a few minutes, and I'll try and get back to my desk to get you the ticker.
Okay. Sounds good.
Any of the guys still in sound? Okay, crazy pop, close 20% up.
Yeah, that was amazing. I mean, I got out of it a while ago. I did not enjoy that pop, but whoever was in that, I guess Dave was in that because he was
Dave's in it.
pushing it.
And maybe
I mean,
Scott.
congratulations. That was a nice win.
I
That's a
should
nice
have
one.
recorded that.
I'm still
Hey,
doing my
listen,
Trump
I
dance.
take my licks. But my portfolio for the year is up 44%. So
Awesome.
I'm in great shape. It doesn't really matter, right?
Nope. Hey, there's enough to go around for everybody.
That's right. But I
Yeah.
don't know if we're gonna get these numbers. I'm not being negative, but those are impressive numbers. So
What numbers are those?
I'm sorry.
What numbers?
Those are my numbers.
Oh, you're saying the percent
My
profit.
percent up is 44%.
Yeah. Does anybody know why sound is up?
Esther?
Okay. David, do you know?
Well, Esther will explain it.
Esther?
Is she there?
She's gonna have to unmute. She might be talking, but we can't hear.
Okay, well, basically what Esther was explaining to me is the Reddit crowd is huge sound fans. And what we're seeing in some of these trades is that the young investors, the young kid, I call them kids because they're obviously way younger than I am. They're involved in Reddit and they talk among themselves and they just like the GameStop deal they did a couple years ago. They love SoundHound. And they're when they want something, they just go at it. They don't look at technicals, they don't look at fundamentals, they just go after it. They're a 100% momentum group. And they've jumped on SoundHound, and I don't see any way to get that SoundHound to come back down. It's going to the moon, and I can't
Oh.
explain it. It's one that I wouldn't chase up here. I wouldn't buy it at here, but I'm certainly not going to sell because the momentum is just too strong.
Didn't they just do a deal with Amelia? Didn't they just buy them and get a
Yes.
car deal as well?
Yeah, they acquired a company about 2 months ago. Well, the last quarterly, they announced it the last quarterly deal they had, which was what, November. But I don't know. It's continuing to go, and I'm waiting to see if they pick up Applied too.
I heard Jim Cramer say something about SoundHound the other day on CNBC in the morning. It was like 10 a.m. in the morning.
Yeah.
You know, when Jim Cramer talks about something, everybody runs, right?
He's negative on SoundHound.
I know, but you know, I don't know if that means get in it, don't get in it. I'm not going to chase this. I'll wait for pullback and then I'll jump back in. But it went up big time. I mean, you're talking about doubling, right? Is that right,
Right.
Dave? Double.
Yeah. So the big thing that I think was SoundHound. So you got the Reddit crowd after it, and right now my numbers are still showing that 22% of SoundHound is held short. So these shorts are getting squeezed to death right now. And I think that's what these big moves are. These big moves are where they're forcing people out. And so you can see the two big bars, today and then 5 days ago. Was that a Friday also?
This would be Friday here.
Okay. So it was on a Thursday. So Thursday and I don't know, but I think the shorts have a lot to do with it because somebody's losing their fannies on this. Because if you're in this thing short, you are just getting smoked.
I have a YouTube video very much criticizing and thinking that this is not going to go anywhere. I posted in, I guess that you all, if you like to see. This is art.
Okay, thank you.
When the retails latch onto something, look out.
Exactly. That they trade with the, I don't know. It's scary the way they trade, but
They trade with their parents' money.
You can't-
There you go.
you certainly can't deny their momentum.
So today's implied volatility on the 22 call options is 1,261, which means they believe SoundHound is going to 22, like in a big way. So
Wow.
I think it's what, at 1612. Now those expire today at 3 o'clock, but if you look at the 20s, like the $24 at 210% implied vol, which is still very sizable. Even the puts are in the 100 range. So it's the key is when that implied volatility disappears, that's when it's probably topped out and it's headed south. So that could change in a day. So just be aware of that. But on a volume side, when it comes to price targets, $20 has the volume on the December 20th call options is 11,096, which is very sizable in comparison to what it historically is. So if you're looking for a price target in the next week, $20 could be your top side, as well as on the bottom side, 13 13 could be your bottom side. So your put, that's where there's a lot of put options.
Not a
Put
bad
option
bet.
volume is. So
That's not a
but that
bad bet.
changes. No, and I mean you think about a run like it's having, it's like you should expect a pullback to some level, you know. So yeah.
Well, Mark, did you still have that chart? Put that Soundhound chart up again. One of the things that I was Esther and I was talking about, and I was telling Paul, we were talking the other day. You see the doji red candle in the middle of the upward movement?
Yeah.
So you got a total standoff on that day. It's like you got the tall green skinny candle with the doji in the middle. Just to the left of it is where it was running up and it ran into resistance and it was even match. The next day, the seller started to get hold, but it was still pretty much an even match. That's why you got the doji. The third day, it came down all the way down here to like 1250 and stopped. So they ran, and if you look at the volume numbers, you can see the volume is decreasing, which is telling me they're running out of sellers. So I jumped in here again, bought more at 1372, and it's run back up. So how I watch, the candle that I watch the most are dojis, because to me those tell me a reversal, and they tell me the story, and that's what I'm looking at. So when I saw them running out of sellers, I jumped back in. Now, if this thing keeps going up to 20 and we get another one of those green candles that is real tall, but it's doji right in the middle, so it's a half and half, I'm out. Because that's going to tell me that this is going to roll over. Anyways, that's what I look for.
Okay. Thanks. I modified the sell orders and I went to loose. Okay. Distance from the current price just to see where it was at. And you'll see some sells around 1780 according to the program. And let's look at medium, see where the medium sells are. Oh, look at that. Medium sells are right where it's at right now. So just be aware. Use these tools to help you out.
Your tools are amazing, Mark. They really do indicate momentum stoppers. There's no doubt about it.
They're pretty good. You know, nothing's perfect, but these are pretty close. You know, for me at least. You know, did we answer everyone's questions in the chat? I see it sitting there. I think so. Looks like Jeanette's had some Bitcoin for a while. That's good. Okay, I don't see any questions. Anyone else have anything? Trent, you have anything?
No, not really. I think what you pointed out in the charts of interest today, how everything is sort of getting to that green light of death level, especially in the Mag 7, and the indexes needs to be paid attention to. And I've started going down, like going through searches for smaller companies, less volume, and finding a couple things. But I'm just sort of, I think we're starting to see a little bit of a overbought market in a sense. And it'll probably continue to ease, inch its way up into the first of the year. And then I think at that point, that's when a correction would come because they start brand new. They can take some profits
Yes.
and rebalance in a way they see the market going. But I'm optimistic going into the first quarter. I think we're going to see some acceleration and growth, especially if they lower interest rates again. But that also means inflation, and eventually could come around to the Fed going, we've accelerated inflation too much, and they're going to have to flip the script and start raising again. So, but I'm optimistic as we go into the first quarter. It's just prepare for a bit of a pullback and opportunities to buy stuff at a lower price. So,
And remember, next week's our last full week of trading this year, and then the next 2 weeks are cut in half. Okay, because of Christmas and New Year's, so the volume will be down. You have your window dressing, your potential Santa Claus rally. It's going to be slower, like around Thanksgiving. It's just less traders around, and it's going to be kind of a little snoozy time for stocks, I think. I agree. I've been saying this week that I'm seeing a lot of froth in the major indices, which you can see when you dig down into them. Why? It's the Mag 7s again. And I think it is window dressing, to bring those back in. Majority of funds don't beat the S&P 500. And so they have to look good, and I think that's what we're seeing. But
It's going to be choppy,
Yeah.
right?
Yeah.
That's the way I
Yeah.
see it. It's going to get
Yeah.
choppy.
Yep, definitely.
And we have to
Cool.
wait till Mr. Trump gets in the door,
yeah, I think there's a lot of expectations. It's a matter of what do they implement, how fast do they implement, and do they even implement, or was it a lot of talk? So we'll see.
I
But
think expectations are really high.
Mhm.
yeah, so high.
But the
Yeah, a
problem
little
is
too
that
high.
our debt is high too. So
That's a
it's
big
kind
problem.
of, that's the real problem, unless they come up with that money to pay it down.
Yeah,
I think one of the biggest issues we have is the housing, which is killing all businesses across the US. By housing, you see a trend. Housing is
yeah,
falling apart in Florida in a big way.
yeah,
I see it up by me in Ponte Vedra. But that controls so many industries: carpet, furniture, electrical,
Shingles.
shingles, wood.
Yep.
yeah.
It
Cabinets,
controls,
appliances.
yeah, it controls everything. And I was at the car dealer the other day, and my sales guy said it's bad, real bad. So,
Really.
yeah, that was the reading.
Wow.
And he's been around a long time. So I think it's going to get worse in 25 before we see it getting better. Tom Lee said that he's expecting a good first half. The second half, he's saying that the market's going to go to 6,600. It's going to hit 7,000, and then he says after the first half, and it's going to head 6,600. That's a big gap.
Definitely.
Yeah,
So he's been pretty accurate overall.
He has. He's been a perma bull too, for the most part.
What's up, Dave?
Yeah.
Dave has.
If the news comes through like we've been hearing, maybe this weekend the war in the Middle East ends. How do you think the market's going to respond to that? Do you think there'll be a response?
Zero.
More and more of these people are just looking at Trump and saying, you know what, I'm not going to screw with the guy, and they're stopping fighting.
I look at the market. I look at the market when the war was going on, and it continued to hit new highs. So we'll see. Seems like no one cared about it in the market.
And
Yeah, I
the other
say
thing,
zero.
Lockheed Martin's diving.
Yeah,
looking at these,
all the defense stocks have not really popped with this war.
Oh, I'm
Well, maybe
sorry,
on the-
guys. They're just passing a big contract, a huge contract for all of them. I forget the number, what they call it, but you know, it's trillions of dollars. So,
Yeah.
I don't think that they are going to be affected at all.
Interesting.
Yep.
Well, hey guys,
that's-
we're at
that's-
go ahead, Mark.
No, I was going to say the same thing you do. You go ahead.
We're at 1 o'clock. I gotta get some lunch, and then we got another call at 1:30. But we are having Kerry's call, and we'll be back here on Friday as well. And anyhow, we'll see you all a little later.
Take
Have a good
care.
weekend, everyone.
Later,
I
guys.
don't see
All
you.
right.
see you
Yep.
later,
See ya.
guys.
Thank you. Good night.
Bye.
Good night.